Well, hello there, everybody. I really want to be bullish here, but there are some warning signs that continue to build up, and we're going to discuss that on today's Stock Market Brief Show. Hope you're enjoying your 3-day weekend. Why do I want it to be bullish? Well, I typically make a lot more money when the market is moving up. Now, in today's video, we're going to talk about multiple different time frames, some actionable stuff all the way down to the 15 minutes, and then also the warning signs that I'm seeing take place. If we take a look at the 11 sectors on the week-to-date performance, one interesting thing that took place on this last trading week is we're starting to see utilities and consumer staples creep in the lead there. You can see those were two of the top 3 performing sectors. Now, this is a risk-on sector right over here, consumer discretionary, really led the way with Tesla. Now, going into this next week, we got a lot of stuff that can throw the markets, and it's going to give us some really good data. We got a lot of retail earnings coming up of the likes of Walmart, Home Depot. Okay, so those are going to be some of the big ones. Now, why is that important? Well, you may not know this, but around 70% of the GDP is based off of private consumption or consumer consumption. And we've taken a look at like a retail ETF like XRT. It's up around 18% year to date. So it's been doing quite well. If we take a look at its expected move, it could come up to around 74 this next week or potentially down to around 68 and some change. We also have some big stuff taking place this next week as well. We have the FOMC minutes, so we'll see here if we get any new type of data that could potentially send the markets for a big rally or potentially put it back on its face. Now, we look over here on Friday, we have personal income, some other big reports we'll talk about later in the week, which, by the way, if you haven't done so already, make sure to subscribe and like the channel because it's greatly appreciated. If you like technical analysis, intermarket analysis, we're going to hop into where we see money rotating right now, which is kind of the warning sign that I am seeing take place. And if you take a look here, this is all safety assets relative to the S&P 500. Okay, so you have gold, you have utilities, consumer staples, TLT, defensive, and healthcare. Now, this pink line going down the screen right here, this is just the start of 2023. And as you can see, the lines have been all going down, right? So basically what that tells me is, hey, risky or risk-off type assets, they're not, people don't really want them. But there's a sudden change taking place here in the last week or two. You're starting to see the relative performance of safety assets start to turn up and outperform the S&P 500, which could indicate that, hey, risk-off might be here in our near future. Now, they're all below their 50 EMA. So when they start crossing above, that'd be a more of a tell sign for me. That's just a quick little indicator that I use of crossing over. But now also to take a look, I want to look at a couple safety sectors here. So utilities, I'm looking at the advanced decline cumulative line, okay? So the advanced decline percent cumulative line, blah, 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 blah. And then up here is the utility sector, XLU. And what I want to point out here is you can see that the price action, right, is putting in a low here, lower low, and then another lower low. But if you look at the advanced decline line, the cumulative line, what you're starting to see here is the internals. You have a low, you have a higher low, and then you have a higher low. So as price action's been going down, the actually internals of it have been actually getting stronger, which could indicate that, hey, are we about to see some strength pop into utilities, which means that if we take a look here, this can start performing, potentially crossing back up through that 50 EMA there, which tells me that utilities could very well be on the cusp of outperforming the S&P 500. Another one is healthcare. So healthcare has been kind of just this, dragging down, right? But this last trading day in healthcare, the healthcare that I'm looking at here is the XLV. That's a spider ETF. You can see here this last day we gapped down and engulfed the entire body and candle of the last trading day prior to that, which was Thursday. So that is a bullish engulfing candle right here, which could indicate, it's a 2-bar candle reversal, which means we could potentially start heading higher. But if you do take a look, you have low, 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 but then you have a higher low, higher low, higher low, higher low. So the internals of the advanced decline line are actually moving up. Meanwhile, the price action has been going down and we're starting to see a 2-bar reversal. Does this mean in certainty that healthcare is going to start moving up and potentially outperforming the S&P 500? Absolutely not with certainty, but there are some internals that are taking place that could lead, in hindsight, if we look at it a month from now and all of a sudden healthcare is up here, we'd be like, oh, okay, it was so obvious, right? So I'm just pointing out what I'm seeing on the charts take place. Now, if we take a look at more risk off risk on type assets, where we look at, the relative performance of Meta to S&P 500, Apple, Nvidia, Google, Microsoft, Amazon, Netflix, and Tesla down here. In 2023, these have, if you just look from here at this point, they've all been going up. All right, they've all been pretty much moving up, if not flat. However, in the last couple of weeks, what are we seeing? So if we look at the last couple of weeks, Tesla has been doing totally fine. However, we're starting to see Netflix kind of come down a little bit. It's rather flat, but it's still trending up. Okay, it's still trending up. Amazon crossed down through that 50 EMA and it's heading down definitely. You can see Microsoft starting to pull back down. It's still above that 50 EMA. Google starting to pull back down. Nvidia still trending up really nicely, but it's starting to pull back. Apple is rather flat over here, and it's still above a 50 EMA. And then you start to see Meta pull back slightly, but it is still above that EMA too. So in all honesty, it is still bullish looking at this, including if you look back to 2023, the start of the year. This could simply be just a period of consolidation in the markets. But in order to really see that, we're going to have to look at all the time frames. So if we take a look at the monthly, we're going to look at the expected moves. The expected moves for the month are this upper line right here, the solid black line. Those are the expected moves for the month. And you can see we came up to it. These dashed lines, that's the quarterly expected move. If you don't know what these expected moves are, in the description, I have a link to the video that explains them. They're what the options market priced in as far as forward-looking risk. So we pulled this up. These lines, right? These lines, they're not just me drawing on the screen. Those lines were given to us, those numbers were given to us before or right at the start of the month of February. And you can see we pulled up into these areas and we started to back off. However, in a monthly time frame, we are still above that 5 EMA, and this is starting to curl over. So, hey, it looks decent. However, the monthly candle right now is not looking all too hot. But we still got time left. Qs, look at where it tagged. It came right into that monthly expected move and started backing off there. Still holding that monthly 5 EMA. And you can see that we're right there on the quarterly EMA there too as well. Remember, if you're looking at this as a bell curve, right, 68% of the time, boom, it closes within the expected move. So in the monthly expected move, it'd be set to close between 280 to 310. In the quarterly expected move, which we have one more month left, January, February, March, it'd be closing within 300 to down here all the way at 240. So anywhere within there, that means the options market were accurate in pricing in its risk. If you take a look at IWM, it's right there on that quarterly expected move. This is starting to curl over quite a bit. So this is actually, looking pretty decent actually, which means that, hey, maybe can this potentially be a bottom? Well, we're getting a lot of retail stuff, earnings coming out this next week. We'll see here if we get some hit to the downside or not. Remember, we've been faked out before. This was one big green candle all the way up to 200, completely reversed on itself. The next month, we're closing at a low, and then we're right back up. So chop, 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 right? A lot of chop. If you see the monthly expected move is just above 200, we came up to it and we started backing off from that level too. Let's take a look at the weekly time frame. What you'll notice here is a lot of consolidation, a lot of inside trading candles, okay? So for S&P 500, we did crack a low right there and we started breaking down further. It's a pretty nasty looking candle. However, we're just really trading in within this week and we're still holding that weekly 5 EMA. And you can see here we're above a 200 weekly moving average. We're slightly above the 50 week moving average, but it is still declining. So we got to hold this in order for this to start turning itself back around and, changing that trend from declining to inclining would be a lot better. Now, if you look at the NASDAQ 100, this was an inside trading candle to this week. And then this candle was an inside trading candle to this week. So this right here, boom, boom, all we're doing is consolidating. So to be more bullish, you want to see these, you want to see it, take out this prior high. Or, to be more bearish, potentially take out this low where we can see a stronger move to the downside. Overall, the PMO, this is the price momentum oscillator. This is a below zero, which is not great, but it is, pointing up. Nice spread between the two, tells us the trend is strong. But if this starts curling back, and this starts bearish crossover, that would not be nearly as good. If we take a look at the IWM, also inside trading candle, I'm going to keep moving on faster. NASDAQ Composite, inside trading candle there too as well. Not the greatest looking candle with that long upper wick. Tells us that the bears came back into play. We'll see if the bulls can take that back. Dow Jones Industrial Average, this was not an inside trading candle. This was an outside trading week. Finished, rather mute, right? It was flat. We'll call it unchanged, but it hasn't actually moved at all. I mean, we've seen a lot of volatility here, but it's just been, you can see these small, tiny bodies, small body, small body, small body. It indicates indecision, like, hey, Do we want to roll over here, or are the bulls going to step up and do something? Well, I'll show you on the daily time frame this a little bit clearer, but it does look like, we had this big move. Now we have a consolidation. The PMO is starting to flatten out to potentially curl over. And this outside trading week, closing down on the week, the bulls need to step it up here big time, because you don't want to see it close down below this 5 EMA and then it start pulling back down, potentially all the way down to this prior low over here, which is around 32,750. Okay, you want to see it start taking out that 34,250 if you're bullish and start heading higher. Let's take a look at some daily charts. S&P 500 on the daily time frame. You can see the weekly expected move over here, which is roughly around 4,000. I believe the number was 4,005. If you're in the Patreon group, I posted already on Discord all those numbers, so you have access to those, and I'll share them here probably on the next market brief video. So once again, subscribe to the channel if you haven't done so already. If you want that data, I'll show it on the next video. 4150 to the upside, so 68% of the time it finishes within there. Remember, it's a smaller trading week this week, so the volatility is a little bit smaller here as far as the options market pricing it in, but don't be fooled. We can see 2 sigma moves still at this particular point in time. If we take a look over here on the daily time frame, this is why I still like being bullish, is because we're still above that inclining, right, year-to-date anchored VWAP, and that is, a good sign. Now, overall, right, we're talking about this potential bull flag over here. It's still holding, right? On the last trading day, we came all the way down, but we did close back at the highs of the day. So that's a positive sign that we came all the way down, but then we came here. So, it still looks to me as we crack this low right over here, it tells me that, hey, we have, a new lower low, which opens the door for that year-to-date anchored VWAP. And we'll talk more about that on the 15-minute time frame. If you take a look here at the anchored VWAP from the high over here in the S&P 500, you can see there's been multiple times where price tries to get above it, gets back down. We got above it, everything's good, got back down. We got back above it over here on this bear market rally, pushed back down. Over here, got above it, we're getting pushed back down right now. So what you want to see if you're bullish, you want to see this obviously reclaimed, and then you want to start breaking back out and just watch this, down sloping trend line right there to potentially start heading higher to that 420 to 430 level, which would be that next area of supply. If we take a look at the Qs marked the anchored VWAP from this high over here in 2021. You can see we've had multiple attempts to try to, rally up through it. We try to rally up into it, and then right now we're doing the same thing. And you can see here, these bear market rallies, they've all, this one and this one have got pushed back down, and you can see 16 or 17%, we'll call it 25% run, and this was a 21% run from these, from the bottom to over here, bottom to up here, bottom to up here. And now as it stands right now, if we zoom in, right, we are potentially flagging. You want to get above this trend line if you're, bullish the Qs. We're still above that year to date, right? So that's positive. And you can see this, gray box over here that I drew in. So this gray box right here, you can see it's good that the price action's holding above that, because it's acted as prior support, and then it's acted as resistance, it's been resistance, and then it's acting as support, and you can see we came down to it again, but we closed near the highs of the day. So as long as we can hold these levels here, even if it's for a couple more days, the year-to-date anchored VWAP can start moving back up into it. Right, it's still trending up, so it's bullish in nature as it stands right now. But if we start getting below these, like it's opening the door, right? If we close below this low, it opens the door for the year-to-date anchored VWAP, and we have to see if price can hold that, and that'd be more positive. As it stands right now, the anchored VWAP, if you measure from up here, right, it's been declining. Over here, it's been declining, but now what we're starting to see is it start to flatten itself out here. And that's a positive sign, but you need, in order for this to start trending up, like it's trending up down here, you need to see price action get back above it. You need to see more volume, more towards the buyers, and then you want to see it hold as a level of support to be a lot more bullish. So if you think you missed something, you haven't, right? You haven't missed it, especially if this right here was the bottom, right? We still have a long way to go all the way up to the top. So, don't be nervous, Nelly, just be patient, Peter, or whatever. IWM, if we anchor a VWAP up from the top, you can see it's tried multiple times here, rejected, and then right now what we're seeing here is it's starting to flatten out, so that's positive. So this might change the sentiment, right? It's telling us that the average buyer here is basically, average buyer from this point all throughout here, all that time, is basically at the average price. So it's right now people are basically flat. So we'll see here if we're going to make a decisive move to the upside and hold this year-to-date anchored VWAP, or if we're going to start trying to, if the bears want to try to make a move to that year-to-date anchored VWAP. If we zoom into that, you can see the IWM is flagging right here. It's just consolidating, which is good to see as this peak, this high anchored VWAP right over here from the high, starting to flatten out. So if we start breaking out, we're going to start looking more above to 200 as that level of next area of supply. And then above that, you'd want to start watching up over here to around 210. So as it stands, we're above that year-to-date anchored VWAP. That's positive. We're holding this level. It used to be support, then it acted as resistance, then it acted as resistance, and now it's holding as support. So if we start breaking back down through this and the year-to-date anchored VWAP, more supply could enter into the markets because the average buyer would be, once again, being pushed away from the peak and then also pushed away from that year-to-date anchored VWAP. So those are important ones to watch. If you take a look at the daily Dow Jones Industrial Average, this was one that I wanted to point out here that we're just kind of consolidating. We're coiling up, right? This last trading day, if you look over here, we gapped down and we closed 50% up through that prior trading candle. That is a bullish piercing pattern, which could indicate we might be able to start moving up and try to retest this trend line again. So that is bullish. You can see we've been holding above this 200-day moving average. It's starting to flatten out. The longer we stay there, it can start turning back up. But remember, this is just coiling in a bullish consolidation. If it starts cracking down here, test this low. And if it starts cracking down through that one, it opens the door here to retest that 200-day moving average. So we'll continue to monitor that one. Let's take a look at the 15-minute time frames to give more actionable stuff on the shorter time frames. Now, if you take a look at this purple line, the purple line is the 5-day moving average. And you can see here, it's been neutral, right? It's been neutral. It's been holding up. It's been breaking down, holding up. Just a lot of, rallies that were faded, rallies that were faded, rallies that were faded. And now it's neutral. So it's not really telling us a direction of the trend. It's just neutral. Now below us, this is the weekly expected move. These are the orange lines, right? 399.84, 414.68 to the upside. So next week, I would be watching out for one of these levels to get tagged. If we start moving down to the downside, this right here, this red line, that's that year-to-date anchored VWAP. Okay, so if we, once again, on the last video, I said, hey, watch out for this. If it gets cracked, it opens the door to that. We cracked it. All right, and then, if you were in the Discord, you probably saw me post if it starts U-turning this and reclaiming the daily VWAP, look for a pop-up higher because it is OPEX, right? So we could see those rallies. We saw that rally. So the likely scenario here is if we get some follow through, we can potentially close that gap, maybe retest the 5-day moving average, see if that holds, and then you never know. It could be something like that where it creates another low, because this is a low, a lower low, and then it tries to go for that year-to-date anchored VWAP. That seems possible, but really, if you take a look back to the left, we're just in a bunch of chop as it stands right now. So if you've been making money in February in midst of all this chop, congratulations. That is a win in of itself, especially in an untrending market. If you take a look at the Qs, we have that year-to-date anchored VWAP below the lower weekly expected move. Remember, we're just chopping here too as well. The 5-day moving average, it's neutral. All right, so what do we see here? Well, if it starts, we came down to try to test this area, didn't break it, and now we're kind of flagging right here. So if it comes back up, or just remember, the 5-day moving average, we're below it. The longer we're below it, it's going to start curling back down, which could be negative for the overall, the Qs, the NASDAQ 100. If we take a look at the IWM is actually, the 5-day moving average is starting to trend up. I anchored a VWAP over here to this prior peak over here, and you can see price action held as resistance, supply, right? Resistance. We try to break through it. Open down here. We try to break through it. Failed. And now we're right there, pinched between the 5-day moving average, it's inclining, and then this prior little peak here, anchored VWAP. So if we start breaking above this level, that opens the door to go retest that 195. If we can get through that, it opens the door to touch that upper weekly expected move. If we start breaking down potentially from this trend line right here, this could be very well just a bear flag, this little channel. So if we start breaking down through this channel, that opens the door right here to the lower weekly expected move, and also potentially even outside of it to that year-to-date anchored VWAP. Now let's take a look at a couple of stock market indicators that are kind of flashing a little bit of warning signs. Could be nothing, right? The bulls need to really step up here. But this right here is known as the 5, 10, 20 timer. It's using EMAs, the 5, 10, and the 20. And when you have bullish crossovers, it potentially changes and marks potential changes in trend. And the first things that are typically crossed are the lower ones, right? The 5 and 10. So I'm highlighting that here. We just had a 5 cross down through the 10, and they're both pointing down right now at this time. So the bulls need to do something quick, or this is going to start spreading out like it did over here, and then it indicates that we can have further sell side. And you can see here the 20 is still holding up and price action's right by it. The last time we had a bullish crossover was right here, and it really was the kickoff of this rally. So now we're seeing it here. Is this going to be the kickoff to potentially a pull down more to the downside? Well, we will see the bulls have some work to do. If you pair this also with the NASDAQ summation index, you can see here we had that crossover over here on the parabolic star, and it's pointing down. The market's going through consolidation. This could indicate a potential change in trend. We had that negative divergence right there in the NASDAQ McClellan oscillator. So it's not looking overall so good. You'd want to see this start to turn back up, and you want to see the parabolic star up, down, tick through that. And then all of a sudden the trend could indicate that we're going to start heading another leg higher. Summation index for the New York Stock Exchange, a more broader market over here too as well. It is, gathering some momentum to the downside, so we got to be careful there. That's all I got for you on today's episode, everybody. Hope you all had a wonderful 3-day weekend. See you later.